Hey traders, Steven here with tradesman.com. It is Friday, April the 1st. We're going to look at the overall market, S&P 500 and the NASDAQ, and then we're going to look at the top ETFs of the week, which ETFs are setting up. So let's go ahead and get started here. We have the S&P 500, the daily chart right here. You know, it's really been a nice little thrust up, right? The market really went straight up for a couple weeks. And if we're looking at the S&P 500, it broke above this pivot. It broke above these pivots. It broke above the 200, the 50, the 20. So right now it's kind of above what I'd like to say is this support zone. And we're going to find out if support comes in or not. I think in an ideal world, the market could just, calm down a little bit and just maybe go sideways. Let these moving averages an opportunity to kind of curl up and catch up a little bit because you don't want it to get too stretched. But I'm hoping this zone holds right here. Let's kind of put a tracker on that to figure out. So we're looking, S&P really needs to hold 4,400. And right now we're about 2.7% above that level. So it could really kind of test this zone right here, this really 4,500 to 4,400, kind of in this range. So I'm hoping that holds right there. We'll just kind of wait and see. I'm really looking at this. It could be a counter trend rally, right? We could take another leg down, but since we broke above so many resistance levels, I'm looking at the glass half full until it's not. Okay. So I'm gonna really try to ignore all the opinions on TV. Everything from the new variant to Ukraine to the inverted yield curve. There's plenty to not like when you're watching the news. But let's just trade the charts and focus on that. So the NASDAQ doesn't look as good. It is still under the 200-day moving average. You still have the death cross right here. But you have the 20 that's now above the 50. And in my opinion, this is right here should be the support zone, right? Where that 20-50 crossover is and this pivot is. So, and we're still, 2 to 3%. We're still a solid 3% above that level. And the market does need to retrace a little bit. It went straight up for 2 weeks. I'm hoping this holds. If it doesn't, I mean, who really knows what happens? We could obviously get a retest. We could, a lot could happen. But again, right now I'm looking at the glass half full until these what was resistance in the NASDAQ and the S&P 500 should now turn into support. But this is a news-driven headline, so we'll just have to take it day by day and kind of see how this plays out. So let's look at what was really strong this week, what has really led. And honestly, I'm looking at kind of the top 10 here, and there's a lot of laggards in here. If you look at the top one, Turkey, I mean, that's an ugly chart in a downtrend. So I'm really going to focus on some of the ETFs that are really standing out. Utilities it's not a very attractive industry. We don't think of a lot of money when we think of utilities. But if we go back right here, you can see, I'm looking at the weekly chart for a second. So this is JXI. This is the global utilities. And the U.S. utilities looks the same. It's hitting all-time highs. Utilities is hitting all-time highs, so it's really hard to say, well, that doesn't really look too good. This looks really good. So you have this thrust up, and I'd say if it really pulls back kind of into this zone, maybe, under 65, maybe more like 64, I think that could be a potentially good entry. So we had a thrust. We'll see if it retraces a little bit. Just kind of keep an eye on it, see if it pulls back. And then you can probably a nice setup for a trade because once it breaks out, I'm assuming it's just going to retest, maybe pull under a little bit, and then you have the rebreak. And if you want to, you can wait for the pullback in the rebreak. A more conservative entry, a better entry would be down here. Another one that is, let's see, not in the top 10, but is looking pretty good or setting up is uranium. So URNM, this still looks good. It's very, very choppy. But let's look at this. You have a nice cup with handle pattern right there. You can see it clear as day when I draw it on there. You got a deep pullback from 104 to 59. And now it is above the handle is above the 50-day moving average, 200-day moving average crossover. A breakout would be a buy. I mean, this looks pretty good. If it breaks out, you could enter it with just a stop loss under this week's low. It's really just that simple. If uranium, well, no, that's not a reversal pattern. So, but a nice cup with handle pattern. It's surged up here. It's kind of taking a breather. So we'll just kind of wait and see. There's a lot of volatility around this surrounding the Russia-Ukraine war. So it's going to be a news-driven trade, but it could absolutely take off. Another one, you know, a lot of the commodities are a little bit extended, right? Oil is starting to pull back, which, you know, even though I own plenty of oil stocks, I'm happy with oil pulling back because it's just good for America. It's good for the average day person. It's good for our economy. We don't need $100 oil or $130 oil. It's just not going to help anybody out. If you want to make money off oil, maybe you can make it on the short side. But so oil is pulling back a little bit, and it could just be consolidating. But you have Joe right here, coffee. This looks pretty interesting right here. Now, this is obviously more thinly traded, so I'm just kind of showing you the chart, really. But look at right here. You really have this support zone that broke, and it's also finding support at the 200-day moving average. But if it breaks above last week's high, let me kind of clean this up. So you have a little mini double bottom support at the 200-day moving average. If it moves higher at all, I think that's a nice little entry, you know, with just a stop under the 200-day moving average, right? It's 13% below the all-time high. I don't think it would be that hard for it to go back up. Okay, so this is another trade, maybe not an attractive tech stock or a cannabis stock or anything like that, but you know, in this new world that we could enter, right? We could enter a commodity super cycle. We gotta really be thinking a little bit differently, and we gotta adjust and adapt. And sometimes when the tech stocks or the growth stocks, they're not necessarily participating, even though they've done well the last 2 weeks, we have to look at wherever we can to make money. And I drink coffee. I love coffee. So why not trade coffee? Another one that is really interesting is Mexico. And it's just out of the top 10 for the week, but it almost looks like the utilities chart if we just looked at. So you really have, I mean, it's kind of been grinding higher, but let's just say it's been in a sideways consolidation for a long time, for a year. Let's just say this consolidation has been going on for approximately a year. That's safe. That's right there. And now it's breaking out. I couldn't really find any news on Mexico. I mean, I just looked right here in my little news feed. Nothing really about this ETF at least, but it's happening, right? So again, when you have, this could be an inverse head and shoulders pattern, kind of a big one, and it broke the neckline. See that right there? You got the shoulder, the head, the shoulder, neckline, breakout. So again, I'm totally fine looking wherever I need to look at to survive volatile markets. Okay, I don't always have to trade growth stocks or tech stocks, or if Mexico, utilities, uranium, coffee is breaking out, I'm fine with it. Let's maintain, let's leave our biases at the door. But this looks a lot like the utilities chart. So with something like this, I think you buy, you know, if it pulls back to 52, it could be a decent entry. This is looking a lot better than the U.S. markets, okay? And emerging markets could really, you know, take their leadership, you know, have their day. I mean, this is way, way down here. But so maybe that's not a good example. But I think if you have, typically emerging markets do better when commodity prices go up. So there's a lot of correlation there. So I hope this was helpful. We have the utilities, the JXI, right? You have the uranium, URNM. You have coffee, JO, and then you have Mexico, EWW, to keep on your watch list and see if that's something that you would like to trade.